presentation of Welcome to our presentation on SimpliCD. Why should we be interested in SimpliCD? What does it have to offer? Well, I think one of the unique features in SimpliCD, it's like we always hear at Quantify, we're always trying to encourage our members to invest through us because we have the same business model as credit unions. It's all about our members. And I think SimpliCD actually exemplifies that. Actually, SimpliCD is actually, the custodian is Primary Financial, which is a corporate QSO of corporate credit unions. Exactly how many, I don't know. Not all the corporate credit unions, but the majority of them. And since we encourage everyone to use SimpliCD, we obviously feel that it's the best route. It simplifies the work for credit unions. It's like one-stop shopping. You don't have to run around and make phone calls and check rates and worry about interest payments from here and there. It's all done for us with SimpliCD. So it's truly one-stop shopping. Not only does it offer the investment side, it also offers the funding side. So the vast majority of our members, about 180 of our members, are signed up with SimpliCD, do the investing side. But we do have most of our members, because it's quite easy to sign you up. If you do sign up for SimpliCD, the paperwork's very simple. Just to sign up, I think it's 1 or 2 signatures, one form to do the issuance side. So we obviously encourage you to sign up for that side of SimpliCD, because you never know down the road. We have a lot of people who will sit there and say, oh, we don't really need funds right now, but you don't know down the road. So we encourage you to look at both aspects, the funding and investing side. So how does SimpliCD really stack up? Like I mentioned, it is a QSO of corporate credit unions. It's Primary Financial. And the SimpliCD program has been around for about 20 years. And it offers CD investments. We have all types of, actually even callables. We don't even recommend that. We never think that's actually beneficial to our clients. So to be honest with you, if you're going to ask me for a callable, I'm going to really try to steer you away from it. So we have a wide range of terms on these SimpliCDs, anything that will from 30 days all the way out to 10 years. We also have odd terms. It could be 54 weeks. It could be 8 years. It all determines on what the market conditions are at the time and what the issuers are looking for. Some of the distinctive, unique benefits of it is first of all, it's very competitive rates. You have an access to a very large pool of credit unions. Actually, there's probably about 44,000 institutional investors, so it's not just credit unions. But this service is primarily, we run the model for credit unions. So we think it's actually quite beneficial for them. Consolidated interest payments. I think the biggest thing you want to think about with SimpliCD, it's one statement, one interest payment. You get rid of back office headaches, which you can also issue one certificate. If you're trying to issue $100,000 or $50 million, we just recently had a member who left CD rate line. And the reason why is because of the ability to issue one single certificate. And it was quite a sizable amount that they're looking to do. It makes it easy for them. They get one payment for the issuance. And then they have all the interest payments to the individual investors that is basically taken care of by SimpliCD. So it's a simple single transaction settlement, makes easy, which is perfect. I think the other thing, the wires, if you're set up with us, all you need to do is basically have associated account, which gets you a plateau account. And then you have a plateau account, and that money is wired. You wire into that account. And once the money's there, the money is drawn. SimpliCD purchases are drawn from the plateau account. Makes it easy, real easy. They're actually drawn from the account on the day of settlement. There are no fees. There's no subscription fees like some of these other CD services or broker fees. So it makes things easy. I've often have people call up, they're not familiar with CD, and they'll ask me, well, okay, what's the commission on this? And I'm always shocked because no, there's no commission. And they're a little shocked too, because they're not used to that. I'm not too familiar with the other services, what they charge, but all I know is free is cheaper than whatever they charge. Next slide. So like I said, the great thing about Simply is we think of it in terms of investing, buying CDs. Everyone likes to go one spot. They don't have to go search all over the place, make a ton of phone calls. But the really interesting thing I think is very underutilized is the funding side of it. It's an alternative funding side to it. It provides, the liquidity solutions that are quick and scalable. You can determine the block size. You can determine the settlement date. You can determine the fees. The term. Also, alternative funding source. I know a lot of our members will use, whatever, if it's home loan bank advances or institutional borrowing or subscription rate services. It just gives you just an alternative, and it's always good having alternatives. Here at Quantify, we're always, I don't care if it's a broker dealer or whatever arrangement, we always, I don't care if you got 2 or 3 of them, you should have another one. Options, 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 and that's what we think that SimpliCD provides is options. A flexible amounts, like I mentioned before, as little as $100,000. I've seen blocks as big as 50 million. Of course, I haven't been here as long as most, so maybe it's even bigger than that. And they're tailored to your needs. Like I mentioned earlier, you have access to a network of institutional investors. They're not just credit unions. As far as the issuance side, we have Discover Bank, we have UBS, we have Morgan Stanley on this. We have all the big banks. We have Chase on here. I mentioned Morgan Stanley, all the big ones you can mention. So it's not just credit unions. In fact, I would argue the majority are non-credit unions that are doing the issuing, from my experience. Which I mentioned earlier, or touched on a little bit, a pools all the investors into one certificate. How great is that, because you have these investors that want to be insured, and they're buying $248,000 blocks to be exact on Simply, and it's pooled into one certificate. How easy can that be? Also mentioned earlier, no subscription fee, broker fees, or transaction fees. The issuance, on the issuing side, that rate is figured in when you sit down and determine. You'll actually sit down with Primary Financial's analysis team. They'll sit down and give you free market analysis. They'll sit down and tell you and what they think the market conditions are, what you can issue, how big of a size, how long it's going to take you to raise that amount of money. So, and that's all free, that advice. And also, like I mentioned earlier, it's one account, one periodic interest payment, which, like, again, the accounting headaches, I can't imagine if you were doing this individually. And one single transfer payment, $20 million, just one payment. How sweet is that? Okay, like I said, there's over 4,000 financial institutions. This has been a network that's been in for over 20 years. So over those 20 years, we have a lot of institutions on board, which makes it all the more flexible, uh, which is beneficial to you, the member. Now on the investing side, how do we make it simple? It, like I said, mentioned earlier, touched on, it eliminates the purchasing and tracking of rates and collecting of interest. The whole idea of going and looking and calling up this credit union or this bank, searching around, checking every day. In fact, if you get on my list, every day I send you a rate sheet, giving you an idea of a comparison of what simply stacks up according to treasuries and to corporate rates. And we're not biased here. Contrary to what maybe some people think, that we want to sell corporate rates, or we want to sell treasuries, or we want to sell simply, we're going to offer you what's the best rate and what's the best term that fits your options. And only what your what best fits for you. Obviously, we can give you suggestions, and we have some tools that you can contact us later as far as an investing end, that where we can determine if you're trying to get an idea of how far you should go out on the ladder. But if we see that, for instance, that Simply is better on the 3-year, we're going to show you that. I can tell you, our competition, from I've talked to other members, they don't do that. They're maybe just selling you Simply because they want to push Simply. We're not doing that. We're pushing you guys what is the best rate and instrument at that time, because we're there for you. Simply also offers third-party reviews. What do I mean by that? Well, we have a rating system. It's a scale 1 to 5. If you ask me to do a rate run where I'll show you the issuers and what they're offering, we screen out number 5s and actually number 4s right off the bat. We're only going to show you the ones that are rated 1, 2, and 3. Obviously, 1's the highest. And the color codes go from green, you'll notice, and I'll show you this later, green, yellow, and red. Red is bad, just like you'd think. Yellow's okay, and there's nothing really wrong with it. It's just the green is better capitalized, more secure. But we'll point those out to you. We're not going to just sell you one because, hey, that's the best rate. If it's a 3 rating, I'm going to first try to sell you a 1 rating if they're at the same rate. Also, there are safeguards in effect. This is a really neat feature, I think. If you're with SimpliCD, sign up with SimpliCD, whatever you purchase through SimpliCD, through us, it has the safeguard that if you, for instance, bought 248,000 with Morgan Stanley on the 2-year, and you all of a sudden 3 weeks down the road, you see a 1-year that you like, and it's with Morgan Stanley, and I do a rate run, that the Morgan Stanley 1-year will not show up on your rate run. It filters it out because it already is aware that in your portfolio, you have that issuer. So that way you will not exceed those federal insurance limits, which is so important for safety. And it tracks, monitors, and collects all your monthly earnings. In fact, with Simply, for instance, if Simply is not able to collect, it will still pay you that monthly payment. So it's truly acting as, almost like a clearing agent. So if it's not able to collect, it will still pay you that monthly payment. This is an example of a rate run. So if you call me up and say, hey, Grant, I want a rate run, I'm very diligent and I'll get that to you. Some days I've sent out as many as 40. So don't feel bad calling me. I encourage anyone to do it. And this is just a little snapshot of it, gives you an example. I normally set it up so you'll see 5 deep. So you'll have 18 months. You see 5 different issuers. It'll give you the name of the institution. Once again, I'm going to remind you, if you have something with Discovery Bank for for whatever term, if it's a 6-month or if it's a 5-year, Discovery Bank would not show up for the 18-month because it knows that you have it. But if we go through here, it'll show you the term. It will show you the rate. It will show you the ICN number. It'll show you the short name's not important. That's just basically our code number for the actual name on our system here. It'll show you the settlement date, maturity date. So that's something to always look at. You're going to have a wide range of settlement dates here. And if you look here on this, you've got from the 17th to the 31st. So that's always something to consider. It'll break down to the days. If you notice, we don't have any odd lots here. And what I mean by odd lots, you might see a 53-week, or you might see a 17-month. There's 10 months, and I know 7 months off right now, just from my experience of looking at it today, and several different odd lots like that. So you got all these different options. There you also can see the frequencies of payment. You got semi-annually and monthly. The only where you're going to see term normally is if it's like a 30-day. CD type, which would be DTC and custodial. There is a third type that I've seen on here. It's NJ. It's I believe it's Net Jumbo. There's actually a bank named Community that offers that. It's a strange setup. It's only allows in $100,000 batches. Nothing's bigger than 100,000, nothing smaller. So in order to stay under that limit, you'd only be able to do $100,000 and still stay under the federally insured limit. There you can see the amount available. This is good for, I suggest everyone to really look at this, because you'll see how much is available. People will, I'll send this out and they'll take their time getting back to me. And you can see here, if you go about 4 lines down amount, you'll see 398,000. That means there's not even 2 segments here that can be purchased, and it's gone. So you got to move on that. You need to get a hold of me quick. Minimum piece. Normally, most of them don't have a minimum piece, but you can see here, there are a few examples, 45,000, 100,000. And then the maximum piece is always set at 248. We can't go to 251 or anything higher than that. And as you can see in the next column, or 2 columns past that, you'll see that allowable amount. It shows that again. And then you have a rating system, and I explained that 1 through 3. We set our code here so we don't show the 4s, excuse me, and 5s. And these are all green. All of these I would consider good options. This is another snapshot just to give you an example of some of the odd lots that were out there. You'll see an 11-month, 10-month, 278-day. The other day I sold to somebody, called them up because I knew they were looking in that frame, a 17.5 month. You just need to really constantly search here. Most of these banks, actually, I can't say that all the banks are headquarters in the United States. At least, for instance, like there's a Bank of India and the Bank of Israel. They have a North American headquarters. They might be headquarters somewhere else, but they at least have a North American headquarters in the United States. I know some people get worried, especially the Bank of India scares them a little bit, but they're still federally insured, and they are, tend to be in that 1 and 2 rating code. So they're considered credit worthy. You do notice the majority of the issuers here our banks. You'll see Goldman Sachs, Barclays, Capital, like I said, all the big banks. But we also have some big credit unions. For instance, Truestone, which is one of our members, is actually quite a big issuer and participates Simply, and is quite happy with it. This is just an example of a portfolio page that you can just request. All you'd have to do is say, Grant, I've got about 6 or 7 of these. Could you just send me a portfolio page? And here's just a list of a credit union that I cropped out. That here they have, you'll have the list of all your issuers and the rate and the days and the day you purchase and that. And it's just quite simplistic. There's nothing much to say there, but that's something, if you need, you can ask me. I will send it to you. Here's another snapshot of just the idea of the reason why I have this up. I have this up all day on my screen, and the reason I have that up, as long as I have this up, I can give you updates. If you come to me and say, Grant, I'm really looking for a good rate in the 6 month, whenever there's a pop-up, and I'll get several of them, I might get 30 of these a day. What you see is on the right side of the screen, the blue pop-up, and it will notify me immediately when there's a new issuance. So if you let me know, when I'm on my computer, I have a notepad and I have a note of what I see. And if I see something that rings a bell, what you told me, I get a hold of you right away. And that's why I brought up the screen, just to show you what I'm looking at. So that I can be timely and help you out. So it really takes out the searching for you guys. This is just an example of, I was talking about hire on quantify. We're all about, giving you guys options. Like I always mentioned to people, we're always trying to encourage people, or should I say members, to sign up for broker dealers, even if you have a broker dealer. And the reason why we do that is because it's all about having more options. And here's an example of it. Here is an example of what I send out during the day, along with on my emails, much more than just this. Don't expect this is just the only thing that you're going to see, but just gives you a one-stop snapshot of where things are at. I've had people get our market watch and say, well, and they've got it for a whole several years. They have no idea that on the second page is treasuries. So I just do a quick snapshot every morning, and I just say, well, look, here's where treasuries are at. You can see them on the 1 year, 2 year, 3 year, and 5 year. Actually, a little lazy today. I should have done a 4 year, a little crunched. That was not as easy to find, to actually do some searching there. And versus our corporates, and versus the SimpliCD. Now, this is a little unfair, I'm going to tell you, biased representation just for this presentation, because if I've went, from 9 months and under, you're going to find that corporate does much better than SimpliCD, at least during right now. So I'm going to give you a heads up on that right now, because, right now it looks like SimpliCD is the way to go. I'm telling you right off, right now, these are the conditions. But this is one reason why it's good to have SimpliCD as an option. And it's why I encourage every member that's with us to sign up for SimpliCD, because SimpliCD has this characteristic of a lag time. Corporate rates are far more responsive to the market conditions than Simpli. Now, that's great at first as it rise up, but once rates pull back a little bit, like we've have, just recently on treasuries, corporate has followed suit, and you simply has stayed elevated. So it gives you that option to catch that yield while rates are still going down. I've got some members that are stubborn and just, for whatever reason, I got CD rate line or whatever. It's like, yeah, but they don't call you, they don't notify you. This is a tool you should have. Okay, this is just an example of a monthly statement you're going to get. And you're going to get it via email. The one thing that I have not mentioned that I need to mention here is how you receive your interest payments. The interest payments will be received. Normally, the payments will come on the 3rd. I believe if it's by ACH, they show up on the 5th. So, like I said, through the Plateau account where the funds are taken out, your interest payments and on settlement, your principal payment will come through on your Plateau account. And the interest payments will hit on the 3rd. The statements come out on the 1st. The problem is sometimes 1st is on Saturday or Sunday, and you don't get them to the 3rd. Now, also, we have the option, which, if you sign up with me, I automatically sign you up for the automatic monthly email. So you get an email statement instead of a mail statement. Simply has an idea, a way of, or they have a process, which I don't like, I admit, but if you reach out to me, I probably can get that removed, but they tend to send out the statements. You obviously can have both, and I encourage the email via the email. But if you want the paper, well, who am I to argue with that? I never argue with a member. And so just to summarize here and how to stack things up, simply compared to these other rate services, no wire fees, no subscription fees, no safekeeping. It's a DTC eligible CDs. So they're not just custodial CDs there. We have a national network of federally insured bank issuers. That whole pool system of investors I told you was over 4,000. We've been in the business with Simply for over 20 years. Intraday, overdraft are covered even if the issuer sends principal or interest late. That's another feature. One consolidated monthly interest payment. So that's huge. That back office headache that you'd have to deal with makes it simple for you. Hence, that's why they call it SimpliCD. Single transaction settlement, and the service and support in the case issuer merger or failure. I've even had cases, I don't encourage it, but I've had a couple cases where investor made a mistake. And as long as you're not purchasing a CD that's issued, or should I say settling that day, SimpliCD has worked with me. Now today on the 18th, if you told me to purchase CD and came back, 10 minutes later, you're not going to have any luck. But if it's something like on the 30th of this month, Simply does work with us. Can't guarantee anything, but in the past, they've worked with us. So they're very, very flexible. I'd like to end on one note here. It's something that's been brought to Quantify's attention. And like I said, we're all about members. We're trying to help you and give you the best option. We're always constantly competing with the financial service industry when it comes to investing for various reasons. I don't know. There's relationships, or they got to our members first. And we're always trying to explain to you that we run the same business model of being about members that you are. People will say to me, yes, but these financial services, they're not overcharging us. They're doing the industry standard. And my answer to that is that might be so, but they're the financial industry. We're not part of that financial industry. We're part of the credit unions. So we have your model. And so that's what we do. And what we want to do is bring to your attention that we're finding out some of these financial services are actually reaching out to their clients, many of them who are credit unions, unfortunately, that are reaching out and saying, hey, look, we think you should do early redemption on these CDs because rates are up. Well, that might sound good, but they're actually convincing him because they want to do another trade. They want to generate another commission or another transaction. Well, we're not that way. The other thing is we're concerned for our issuers who are credit unions, right? Because now all of a sudden we are seeing a rush, and a lot of investors are considering to early redemption and searching out for the penalty. What is the penalty? But you got to think on the credit union side, and it's a funding issue, right? Now all of a sudden the credit union, the issuer, is exposed to a funding risk. And that is something that we want to bring to everybody's attention. In all honesty, I think it's another reason why you should always consider investing options with us here at Quantify. We're always, steered towards your benefit and what's in the best interest for you. Well, once again, I don't know if there's any questions out there. Hold on here for a second. I appreciate all you who came to visit. And if you have any questions, please notify us at Quantify or Investment Services. Reach out to me. I actually enjoy any SimpliCD questions. And I'm constantly learning about SimpliCD. There's a lot of things I think actually I can still learn. And I find that out by talking to you guys and you guys asking me questions. So thank you. And if there's no questions, have a great evening, rest of your week. Thank you.